Aussie dollar daily forecast, January 20th, fxempire.com. The Australian dollar initially dipped for the Thursday session as the Aussie sold off on poor job numbers out of that country. However, as the day wore on, we did get a little bit of a bounce, and as you can see, we are forming a hammer at the end of the session. Hammer at the top of an uptrend often signals that we have tried to break back down, but we find more buying pressure. Of course, we need to break the top of that range to confirm that, and would be willing to buy at that point, as this would be a game on type of signal for the Aussie. A breaking of the bottom of the hammer, however, becomes a hanging man, which is a very negative uh, pattern, candlestick formation to see in the markets. So, because of that, we have a fairly binary trade. We just go either up as we rise above the top of the Thursday range, and if we can close above that, then it's a buy. If we close below the bottom of the Thursday range, we will have a uptrend line to compete with in this triangle, but that would be a very bearish sign. We'd be willing to sell on a short-term position, buy on a longer-term position, as we think 108 would be the next stop, and perhaps 110. And measuring this previous triangle, it actually measures to 112. So a break of the higher levels of the last couple days, especially the Thursday and the Tuesday being just a little bit higher, could be used as a gauge as well, would be a massively bullish signal, and we would hold the Aussie for several handles. Shorting it, we have to watch this line, but that is a pretty bearish sign when you get a hanging man like that. So the next couple of sessions, perhaps this session today and Friday, will tell the tale, but we should get our answer with the Aussie dollar very soon. We will wait for a daily close, though, for confirmation.